All right, good afternoon, everyone. Welcome to RMA's Town Hall number 2. Hopefully, we've cleared up our technological issues we had last time, and we'll have uninterruptions here. We do have myself and Max, and Tom McGinnis is going to join as a panelist, but I'm going to walk you through this presentation today. We will, I want to just again welcome you and let you know we're going to cover a lot of things again today that some we talked about on Monday. I did want to mention that on our website, and you can see it there on the slide. If you go to our website, at the very top, we've got a button that says Corona or COVID-19 updates, and we are updating that on a regular basis. We just added to it a downloadable guide. Has a lot of great detail and a lot of good examples in it that I think will be really helpful. And so just sort of to let you know what we're going to do today, I'm going to recap quickly a few of the individual provisions we talked about Monday. I'm going to recap a few of the key business provisions we talked about Monday. But the most important thing we're going to do today is we're going to talk about what I'm calling the ABCs of the PPP. That is of course, the Paycheck Protection Program. And as you know, the lines open up, so to speak, tomorrow. The ability to actually submit those applications for those loans is tomorrow. So we wanted to have the webinar today. So if there's any questions you have as you're preparing your documents to submit, you can get those done so you can submit them tomorrow. Again, once we get done, we're going to open the lines for questions. And hopefully my audio will be better. I'm going to scoot up a little closer to my mic. But then we'll open the lines for questions. And again, at any time after the webinar, feel free to email us or call us and we'll answer any questions you have. My slides are not progressing. Wow. Bear with me here. All of a sudden my PowerPoint is locked up. Amazing. All right, here we go. We're going to touch real quickly on the stimulus checks. For the stimulus checks, we talked about this Monday, but we're going to just hit it real quick. As we mentioned, the payments are considered a credit for your 2020 taxes paid in advance. They are based on your adjusted gross income from either 2019, if you filed that return, if not 2018. The amounts you receive are the $1,200 per person, $500 a child. The thresholds for those $1,200 payments are if you're single, $75,000 or less, had a household, $112,500 or less, married, $150,000 or less. The numbers you see to the right of that are the maximum numbers. Once your income, your adjusted gross income goes above those amounts, 99, 146.5, and 198, then you will not get the $1,200 payment. And then anything in between there is phased out $5 for each $100 that you receive in that middle ground. Man, I don't know what's with my PowerPoint, guys. It is not advancing. That's crazy. Here's a few other things on the stimulus checks. If you are on an installment agreement, The IRS will not take this money and apply it to your installment agreement. You will get your check. The amounts will be direct deposited if you use direct deposit on the last return you filed. Otherwise, you'll get a check. And every taxpayer is going to get a letter telling them that a check has been sent. Again, I mentioned that your AGI is going to be accessed from your 19 returns. If those have not been filed, they're going to go to 18. And then if you haven't filed a return, you won't get a check unless you just had Social Security or this railroad retirement. Then the IRS would know about that and you would still get a check. A couple of other personal provisions: unemployment benefits. For 4 months through July 31st, the federal government is adding $600 a week to your state unemployment. An important part there is that it also includes self-employed and independent contractors not generally covered by the state. So I'm not exactly sure where Texas is on this at this very moment, but you're going to get $600 plus whatever the state of Texas gives you. You also have the ability with retirement plans. Sorry about that. You have the ability to take $100,000 out of your retirement plan, be that a IRA or a 401k or whatever type of plan you have. You can pull out up to $100,000 without the 10% penalty, and you have the option of repaying that $100,000 over a 3-year period, or you can pay it all in the 3rd year, your choice. RMDs, which are required minimum distributions, if you've already begun receiving those, you're not required to take one in 2020. And then there's a special above the line contribution for 2020 for charitable contribution. So it's $300 in addition to your standard deduction for the year 2020. Some business related provisions, we're going to touch on just a few again of these. The EIDL loan, or the emergency injury disaster loans, those are loans, unlike the PPP, which are loans with a chance to be forgiven. These are actual loans. They're available to businesses, individuals, contractors, sole proprietors, and they're available now through December 31st. The PPP program, you can only apply for those through June 30th. Again, these are loans. They're based solely on the applicant's credit score. They also allow you to request a $10,000 advance. And if you request that advance, it's supposed to be paid to you within 3 days. And you apply for those loans directly on the SBA's website. You're not required to repay that advance of that $10,000, even if you are eventually denied that EIDL loan.
Randy, one of the things with that, hello everybody, I'm having a few computer problems in my office, so I just jumped in here on Randy's computer. The SBA's typical loan limit is $350,000. For this EIDL, it's been bumped to $1 million. So also as a component of that $10 million maximum for these small business loans, they can be put together with a PPP loan where the total PPP loan can be what, $2 million? And
10.
I'm sorry, up to 10, but 1 million of that is an EIDL.
A couple of other things. There's a refundable payroll tax credit for 50% of wages paid to the employees during the crisis. For eligible employers with 100 or fewer employees, all employee wages qualify. The credits on the first 10,000 of compensation, including health benefits. The credit is for wages paid or incurred from March 13th through December 30th. And for this, you can't use this provision if you're also getting a PPP loan. And it goes for this next one as well. Employers and self-employed can elect to delay the payment of your employer's share of Social Security taxes. That's the 6.2% match on Social Security. You do have to pay those back over the next 2 years by December 31st, 2021 and 2022. So, and again, if you cannot use that provision if you also have a PPP loan. The next item there relates to net operating losses. That's been changed again. It's changed several times with some of the disasters here lately. And it basically says that an NOL that arises in the tax year 18, 19, or 20, meaning the year your returns we're doing now or the previous year or the 20 year, you can carry those loans back for 5 years. So that would allow you, if you lose a lot of money, for example, 19 is a bad year, 20 is a bad year, you can actually go back 5 years and recover tax and get a refund of previous tax paid. In addition, the tax law last year had a provision that limited how much of an NOL you could use in any 1 year. And that provision, that limitation, has been fully removed because of this bill. The PPP, that's what we want to spend a lot of time talking about this afternoon. And then we're going to get to your questions. Do use the chat feature, if you would, to ask questions. Max is going to be monitoring the questions, and then we'll come back and answer your questions after we finish. So the biggest thing that everybody's interested in is this PPP program. $350 billion has been allocated for this. The odds are that there will be more people applying for this $350 billion than $350 billion. It's yet to be seen if more will be allocated, but the guess is that that will probably have to happen. The most important thing to think about with this PPP program is that the goal of it is for you to keep your employees and of course to stay in business. But it gives you a 100% federally guaranteed loan. These loans are going to be dispersed by your local bank. And these loans, as you know, can be forgiven provided that you maintain your payroll during this crisis, or you restore your payroll after the crisis. And we'll talk more in detail about that. Just a few of the provisions. It's for employers with less than 500 people. The coverage period is February 15th, 2020 through June the 30th. Provides for a maximum loan of $10 million. That's through December 31st, 20. And provides allowed and excluded uses of the loan proceeds, which deals with the potential forgiveness that we're going to talk about. One of the other interesting things, it also applies to sole proprietors, independent contractors, self-employed people, and you can include up to $100,000 of that, and you can actually get a loan based on that. What we've called this is sort of the ABCs of the PPP, and I want to try to kind of boil it down and make it somewhat simple or understandable, because it's not necessarily common sense how this thing works. But there's really two key calculations that you're going to make. Number one is you're going to calculate the maximum for your loan. And you do that up front. You do that now. That's what we are doing now, is we are trying to determine, based on the previous year or the previous 12 months, how much your maximum loan amount can be. That's calculation number one.
Can I say something here, Randy?
Sure, jump in.
A lot of the bankers that are out there, and we've been talking to a lot of people and a lot of bankers, and some of the bankers have lost their minds on the amount of documentation that they're requesting. But some of the bankers are requesting a fiscal year calculation from February to January, February of
19 to 20.
19 through January of 20, while the SBA has actually said you can utilize the 2019 calendar. That's so much easier. You've got W-2s that have all of your employees' numbers. You've got all of your 1099s for contractors that you've utilized. That makes a whole lot more sense. And all you're trying to do with this is estimate what the loan amount that you can get is going to be. So getting it spot on and wasting time trying to get that last nickel is not in anybody's benefit here.
Right. And we'll talk more at the conclusion about some of the things at the bank, the banking side of this. But calculation number one is figuring out what your maximum loan amount is, and that's what you're doing now. That's what we've been doing. That just tells you what your loan is. And then number two is that you calculate the amount of the loan that can be forgiven. And that calculation is going to be done for the 8-week period after you get your loan. So again, just you can see there, these two calculations, they're similar, but they're not the same. Number one, we're calculating your loan amount. And again, we don't know what's going to happen once these applications are filed. We all may not get the full amount we requested. It may be a smaller portion. They're expecting an oversubscription for these funds. So everyone may get some percentage of their request. Nobody really knows that yet. But that's calculation number one. Calculation number two is the amount that may be forgiven. And again, keep in mind that, not all of this loan may be forgiven. It depends on how your money's spent the 8 weeks after you get your loan. And again, who can predict what's going to happen the 8 weeks after you get your loan? Nobody knows at this point. So calculation number one, it consists of your payroll cost only. And I say only because on the other calculation number two, we get to add some things to it. So it's payroll cost only, and it includes the following: your employee salaries or wages. It can also include contractors, commissions, any payments that you're making to people that, in a sense, you're employing or utilizing to get your work done. The key is it can be no more than $100,000 per person. So anybody that's made more than $100,000 in the year, be that the 2019 year or be that the previous 12 months that you're using, anybody that made over 100, that's got to be subtracted from that annual amount. You can also include group health care benefits, which is insurance premiums, including medical, dental, HSA contributions you make as an employer, life insurance premiums you pay, disability,
short-term.
Yeah, long-term, short-term disability you pay, any sort of retirement benefits, your 401k match, a profit-sharing contribution, any other sort of employee benefit that the company pays for their people is added to that. Also, you add to that the payment of state or local taxes that are assessed. And that's, for example, in Texas, that's your TWC, your state unemployment that you're paying on a quarterly, or well, every payroll, but you file a quarterly payroll tax return for that. A real key thing is it does not include your FICA Medicare match. Several people have asked that question to us. That's a payroll tax, that's a cost, and you're right, it is, but it's not an allowed part of the calculation. So you figure out what all those things are, and I've got an example for you here in just a minute, but you basically add up those total costs. Then again, you can use your 12 months, you can use 2019, it may be banker driven, but then you divide it by 12, that gets the average monthly amount, and then you multiply it times 2.5, and that equals your maximum loan amount that you can get on your application. So you may very well have your application already done, and that's the number that goes in the blank at the top for the loan amount requested. This is an example, just a quick example of what it might look like for you. Your payroll, you see we have the payroll, we have the annual average, and then we have our multiple. And as you can see for this example, we've come down, we've added health insurance, dental, HSA, group term, 401k, the NEC was a profit sharing contribution. Contractor payment would be what was paid to their 1099 independent contractors. Gets you to your total times 2.5 or times 2.5 gives you that $412,000. And then below that, you see that 103. That's basically 25% of the 412, and that's going to become in handy or be an important number when we get to the forgiveness side. So anyway, that's just a good example there of something you should have already pulled together to figure out what your loan amount's going to be. All right. Tom, you got anything to add on that?
I had a question come up about benefits. If you have somebody who's had compensation over $100,000, say they made, the amount where they could maximize their not 401k, but their profit sharing plan, 401k plan, and get that whole $50,000 plus amount of retirement benefit. And does that have to be scaled back to be similar to what the wage is? For example, if somebody makes $500,000, they do the entire profit sharing plan max, but they only get to take 100. Do they have to pare back that 50,000 that they took for retirement to some lesser number we haven't been able to find that answer out. At this point, we've been taking all of it. So
Yeah.
until we're told something different, the way the act is written, it says payroll benefits. It doesn't say some portion of them. So we're going with 100%.
Right.
That could change while we're talking here.
Right.
But for now, that's what it is.
All right. So moving on, the calculation number two. Calculation number two has to do with how much of your loan can be forgiven. And an important thing to remember is that obvious, and this makes sense, but it's possible when you actually did the calculation, this could happen, but you cannot be forgiven for any more than what you borrowed. So whatever your loan amount is, the maximum forgiveness is that loan amount. And literally as of Wednesday, and this thing again is changing all the time. We had a comment from somebody here in the last hour that even saying SBA may postpone the submission of applications from tomorrow, as everybody is expecting. We've not had confirmation of that, but again, this is a very dynamic, moving, fluid situation that we're dealing with. But the SBA came out on Wednesday. Treasury Department actually said that due to the likely, this is in quotes, due to the likely high subscription, it is anticipated, and again, the word was anticipated, that no more than 25% of the forgiven amount may be for non-payroll cost. And so there's basically going to be a commitment, if you will, if you're going to have your loan forgiven, that of the money, the loan proceeds you spend in those 8 weeks after you get them, that 75% of those go towards payroll cost, not other cost. And we have an example of that here in a minute.
And that makes sense because this is the payroll protection plan.
Exactly.
So,
paycheck protection.
That's where they want it to go.
Right. Yeah. Makes total sense. So what are the costs you can add to the payroll cost, the ones that we just got through talking about that can be included when you calculated your loan amount? What are the additional costs? Those are mortgage interest if you own a building. They are rent if you pay lease at your office. And they are utility payments, which include electricity, gas, water, telephone, and internet. And so as you can see down below, and this was done basically just to get an example of, sort of do a projection for what expenses may be in the 8-week period. This is not an actual, because we haven't had the 8 weeks after the loan, but this is an example. What you see, office rent may be, telephone, electric, water, internet. We pulled all the costs for a full year, got a 12-month average, and then we applied a multiple to that that reflected 8 weeks, since there's 52 weeks in 12 months, and so
right.
So the number was reduced a little bit, but you can see what that number ended up being for the available benefit there. So we were able to add to, if you will, our payroll cost, the additional costs we're going to have in addition to payroll. So these types of costs, mortgage interest, rent, utilities, those get added to our payroll cost to determine how much of our loan can be forgiven. So here's an example of an actual example for forgiveness. And so let's just assume you get a PPP loan for $100,000, and for your loan to be fully forgiven, then your payroll costs have to be at least $75,000. And then if that's the case, then your other cost would have to make up the other $25,000. So of course I did this example to be exact, but in this situation, our payroll costs were 75%. Our rent and our utilities was another 25%. So assuming our FTE count didn't drop and our compensation and salaries didn't drop, and I'll talk about that in a little bit, we would have this loan fully forgiven. All right. Hopefully that makes sense. 100,000, 75% for payroll, rent, utilities, other allowable costs met up the other 25%. We owe zero. Our loan is now fully forgiven.
This is a government program, so it can't be just that easy.
Right. It's never that easy. And some of these calculations, there are questions about them. We don't have all the answers to them. We're going to be giving you our best understanding, and others have told us what we've read in the bill, but there will ultimately be some clarification and some details provided as to how some of these things are going to actually work. Here's an example of a loan that's less than 100% forgiven. In this situation, using the same $100,000 loan we got last time. Our payroll costs were $65,000, so we did not hit the 75%. Our rent and our utilities and other costs were $35,000 or 35%. So you can see we did spend our $100,000 on allowable expenses. However, we didn't hit the 75% threshold for our payroll. And so the calculation that you would do is that you would actually divide those payroll costs, or you would divide the 65,000 by 0.75. That's going to give you 86,666. You then subtract that actual payroll from the 86. So the 86,000 minus your 65 you spent equals 21,666. And so what this rule is basically saying is that of the other 35,000 you had, again, in non-payroll cost, that 21,666 will be forgiven, but the remaining 13,334 will not. So again, I'm assuming here that our FTE count didn't go down and our salaries did not drop by more than 25%. We're going to talk about in a second. But in this example, as you can see, you're still going to have the majority of your loan forgiven, but there is going to be a portion of your non-payroll cost that would not be forgiven.
Did you mention about the change in the time frame of the loan and the percentage rate of the loan earlier?
Yes.
When I was having the computer issues?
Yes, right. I'm about to mention it here in just one second. In fact, that's actually up. Is it back here? Somewhere I've got that. The key there, I'm not sure what happened to that particular slide, but there it is. It's down at the bottom of this slide. The actual interest rate on the loan. So in that previous example I did, you had $13,000 left. It's a loan versus being forgiven. That $13,000 loan would not have any payments required on it for 6 months. In addition, the interest rate is 0.5. So half of 1% is the interest rate. That just changed on Wednesday. Previously, it was a rate not to exceed 4%. So certainly 0.5 does not exceed 4. In addition, the loan term is 2 years. So there's your loan would be due and payable in 2 years. The previous language we assumed on Wednesday was that it would be a 10-year loan. The other piece I mentioned, there's no payment required for the first 6 months, but interest does accrue. So interest is still accruing at 0.5 for the first 6 months. The other two things I want to mention at the top of the slide are pretty important, and this is one of the areas where we don't really have a lot of clear guidance on, but the two other things that are going to be important is what I'm calling the FTE factor. And that basically says that the number of FTEs you have, meaning full-time equivalents, you can go Google that if you don't know what full-time equivalents are, but the number of full-time equivalents you have during this 8-week period after you get your loan, that number over, I'm putting a fraction together, that number of FTEs over the number of FTEs you had between February 15th of 19 and June 30th of 19. So you're going back to the previous year and comparing those numbers. If you had, for example, 10 FTEs in the 8 weeks and then 15 in that prior period I mentioned, then 2/3 of your payroll cost will be forgiven and 1/3 will not.
You know, Randy, I think that got bumped to March 1st.
It may have. That was in our initial presentation.
Yeah.
It may be the period March 1st through June 30th. Whatever it is, there's a period of time in 19 that you're going to compare to the FTEs you have during the 8 weeks. So you won't even be doing this calculation until 8 weeks after you have spent your money, but we will confirm exactly what that denominator is on that fraction, what periods you can use. I think there's even an option to use a different period, but that's generally what the rule states. So basically it's going to say if you decrease the number of employees, then they're going to decrease the amount that they forgive. So it makes sense that if you only had 2/3 of the employees, they're only going to give you 2/3 forgiveness. The same applies on salary reduction. And so if you, and this is going to be on an employee by employee basis, if you decrease the wages of somebody more than 25%, So if you decrease them 24%, 25%, you're okay. But if you decrease them more than 25%, my understanding is that that amount that you decrease them by will not be forgiven from your loan. And that's going to be looking at the 8 weeks, the 8-week period, and you're going to have to use an annualized basis. So what they got paid over that 8 weeks annualized compared to what they got paid in the most recent full quarter, again, comparatively speaking, on an annualized basis, if it decreased more than 25%, you're going to have to figure that number out, and that would be an amount that would not be forgiven. An important thing about this, however, is that if you restore your FTEs or you restore the pay, we've talked to some of our clients who are reducing compensation for their people by 50%. Well, obviously, if you reduce people's compensation by 50%, this is going to impact how much loan can be forgiven. But one of the things that's important is if by June 30th, you restore the FTEs, say you furloughed, a bunch of people, but you put them back on at June 30th, say you reduced compensation 50%, but you restored it back to 80%. If you do that by June 30th, then you're not going to be penalized by having your forgiveness reduced. So again, these things are not perfectly defined, but I think you sort of get the picture that what they're looking for here is that you keep your employees through this time period of February 15th to June 30th. The belief is that's going to be the toughest time for business, that once we all get back to work and life resumes to somewhat normal, that we get through this period, you're not going to need this help. And so it makes sense that they're looking at reduced compensation. They're looking at reduced numbers of employees to reduce the amount of the loan to be forgiven. So it sort of makes sense. I've already mentioned the stuff below there. The interest rate change to 0.5, the loan term of 2 years. Tom, anything else in here that jumps out at you?
No. Well, there are some planning tips like Randy was talking about, when you reduce someone's wages, when you bring them back up, this is such a fluid and dynamic scenario that we're in. But again, like Randy said, this money is to try and keep people as whole as possible during this next 2-month, 3-month period until better times show back up. And if that doesn't happen, this money is there to prop that period up. You can always drop people back down. Me as an employer, if I were going to raise someone's salary or wage up, I'd let them know now that, we get this money. It's good for all of us. If things don't turn around the way everybody hopes and expects that it will by the end of June or what have you, there may be more cuts to come in the future. So you may want to plant that seed with your employees. So because it's the reality of the thing. We're all facing some pretty tough decisions.
Right. Exactly right. We've spoken with a few clients that are doing that, and it may make sense if you're reducing compensation now. Perhaps when you get your loan, you increase compensation. Let your employees know, hey, you better be saving that money because if things aren't better once we finish our 8-week period, we may have to drop back down to previous levels of salary. So again, lots of decisions to be made by all us business owners out there in this regard. All right, conclusion. Tom mentioned this a little bit, but what are the banks saying? I tell you what, this has been an incredible process because as we've learned, Tom and I have learned, we're more ahead of some of this than even the banks are. The banks don't even know some of these things. Some banks, as Tom mentioned, are just simply asking for the application, especially if you've been a customer of the bank and you have a relationship with the bank, and they already perhaps have other loans with them, and they've already got your financial statements and your tax returns and know everything about you. They just want the application and nothing else. Some other banks, even if you have a relationship and you have loans, are still asking for mass quantities of detail, tax returns, proof that you paid your taxes,
The payroll tax returns themselves for 2019, which has nothing to do at all with this. That they do want those documents, and the SBA has specified that one of the ways that you are to validate the expenses that you've taken over that 8-week period is to provide your 941s for that period, or state tax returns. But they're, 941s show what the total payroll is, and if they want to get granular to the per employee basis, in Texas, our Texas Workforce Commission shows wages by person. But I've been dealing with some banks, and today they've changed their minds 2 and 3 times to include driver's licenses. Like I said, I have to correct Randy. I said they have lost their minds. Some are. The law does not say that. The SBA does not say that. They say, were you in business on the 15th of February? Have you been affected by the COVID-19 pandemic? Do you have employees that you're paying? I'm missing.
Yeah, I'm going to read to you right out of the SBA requirements for lenders. They only have to do 3 things to approve these loans. Number 1 is simply to verify you were in business on February 15th, 2020. That if your banker knows you and you've got an account, that shouldn't be hard to prove. They should know that. Number 2 is you need to verify that the borrower has employees for whom the borrower paid salaries and payroll taxes. Again, they could look at your bank statement and see a draft on your payroll and a draft on your payroll taxes. Would not be hard. And then the third thing is verify the dollar amount of average monthly payroll cost. So they very well may ask you for the spreadsheet or what you pulled together to get your number. But I would think something as simple as taking your W-3 for 19, dividing by 12 times 2.5 should give a reasonable verification that the number you're asking for is reasonable. So those are the only things in the law that SBA says the bank has to do. So anything else they're requesting beyond that is all just their internal guidelines, their internal policies. And you may want to check with other banks if you're getting pushback from your bank. A couple of even big banks we've talked to aren't even ready to receive applications yet. Others have already told us, bring them now, send them on over. We'll take them right now. So it really depends. The other interesting thing, I'm going to read this to you, out of the borrowers, which is us, you and I, when can you apply? Well, it says that you can start applying tomorrow, April 3rd. It says that's for small businesses and sole proprietorships.
This is from the SBA.
This is from the SBA.
Okay.
Then it says on April the 10th, a week from tomorrow, independent contractors and self-employed individuals can apply. Well, I'm not sure how in the world, and no one's given us an answer yet, what's the difference between a sole proprietor and an independent contractor or a self-employed individual? We're not real sure.
They all show up on Schedule C.
They all show up in the same place on the tax return. So it's kind of again, the on the street, boots to the ground application of this program has not been obviously thought through. So that's the information. So what you request, what your bank request will be unique to your bank. And so we wish you the best in finding the right bank and getting your loan funded. It's going to be an interesting time in the next few weeks just to see what happens with the applications. My best guess is they're going to get applications. The banks that have good relationships with their customers that know them will probably submit those applications. The ones they don't know very well, they may ask for additional information. But the banks, I think the government has done this somewhat smartly, in that the banks that are distributing the money are going to know their customers and will help reduce fraud and people that are trying to scam the system and get some of this money. So it's going to be an interesting time. So with that, Tom, you want to add anything? We'll go to questions. Max has been monitoring our questions. Tom, anything to add?
I think you got it.
I think we're good. Okay, Max, we have some questions out there.
Yes, we got several good questions. With respect to the EIDL, is the 3 days from filing or for or from a specific date the SBA has set. I've submitted my loan request for the $10,000 emergency funds on March 29th when the Streamline application became available.
Well, the way, if you submitted that application on the 29th, the way the law states is you should have your $10,000 in 3 days. I've not yet talked to anybody who's gotten their 10,000.
We haven't gotten ours.
We did the same thing. We requested ours on Monday or Tuesday.
Monday, I think it was Monday.
I think it was Monday. We requested ours on Monday, so we've not received our $10,000 yet. So,
and they do have our banking information, and
right.
we do accept direct deposit.
So yeah, we'll have to see. We'll have to see when and if those $10,000 payments show up. But they're supposed to be done in 3 days.
3 days.
It might make sense at some point to contact the SBA if it gets past maybe 5 or 6 days, to contact them and see where's your $10,000.
What's next, Max?
Next.
Regarding the calculation of monthly average payroll costs, if you have an employee whose salary is $100,000 and the employer-sponsored 401k is about $7,000, and then the health insurance is $12,000 for a total of $119,000, are you allowed to include that full $119,000 in the calculation, or does the cap for $100,000 kick in?
As we understand it right now, all of those benefits are included, and in addition to the $100,000. There are several places in the bill itself that talk about compensation, defining compensation, limiting compensation, and in none of those places do they say you have to limit benefits. Salary and benefits or wage and benefits cannot exceed $100,000. So from our reading and from others that we've talked about, we're firmly in the corner that it's in addition to the wage. The wage is the only thing that is capped at 100.
Okay. Now, if you have a regular contract worker, such as a bookkeeper, and that contractor is an S Corp and doesn't receive a 1099, can you still include that contractor in your PPP calculation?
No, you cannot. The people that you could include would be if that bookkeeper worked for you as your bookkeeper or your accountant individually, and you gave them a 1099 for the work they did for you for the year, you could include them, because I mean every business needs accounting, every business needs bookkeeping, and if you made the decision to hire a contractor versus an employee, you could use that 1099. But if you've hired a firm, it would be like hiring our CPA firm. If you hired our firm to do the work and paid our firm, you could not use that as part of one of your independent contractors in your payroll calculation.
Now, what about if you currently employ more people now than you did in 2019? What effect will that have on this calculations?
I think that's great.
That's a really good thing. I mean, you should have no problem qualifying for forgiveness if that's the case. I mean, your loan amounts can be based on a lower payroll number than you currently have, so you should have no trouble having that loan forgiven. It's certainly the payroll portion, assuming you can. It's more than 75%. You should have no problem getting that full loan forgiven.
The other thing is the number of FTEs, the number of full-time equivalents,
It's going to be higher
from last year to this year would be a higher number. So when you're doing your math, the numerator and denominator, you're going to be in excess of 1. So that's a very positive thing for whoever has that scenario.
How does the calculation for paid vacation time work with respect to the payroll calculation?
It's simply part of payroll. So if you've paid, whatever you've paid to that individual over that year, be it for paid vacation, be it for hourly work, be it for sick leave, basically the calculation is whatever you paid that employee for that year. Doesn't matter if it's paid vacation, paid sick leave, paid work, whatever you've paid them for the year, that's your number.
Let me mention one other thing here, because like we've mentioned, this thing is very fluid. If probably a lot of you have already looked at the PPP application, and it's interesting that right beside where they say what's your monthly average, what is the amount of loan you're looking for, it asks for total jobs. Now in the bill or the act where it's talking about how you true up, they're talking about FTEs. So FTEs, full-time equivalent people working versus number of jobs can be very different. And
Yeah.
I think that was a mistake.
Yeah.
Personally, I think that it should have been
FTE.
full-time employees on the application, because that's what you're going to be matching to when you have to true the loan up.
But as we mentioned, this is doesn't necessarily have a lot of common sense in it at times. What's next, Max?
Okay, your example shows a full $142,000 for the salary. I thought it was capped at $100,000. But I think that's talking about like company-wide payroll. That's the average monthly payroll for that full company in that example, because the annual payroll of the whole company is 1.7 million. Divided by 12 is the 142,000. So that's what
Right.
I think that was.
That's right. Yeah, that total payroll number already was adjusted for the people over 100. Right. So yeah, so you cannot. You got to cap. Nobody can have an annual comp of more than 100 in that calculation.
Now, are we allowed to select option 1 or option 2 for the forgiveness calculation? Well,
from what I can tell, it's both. It appears to be both. Option 1, option 2. I'm assuming you mean option 1 being
number of employees,
the FTEs. I believe it's both. I believe it's the FTE factor, where you have to take a reduction if you decreased your FTEs in that period. I think that's one reduction. And I think another reduction comes if you reduce compensation more than 25% for an employee. Mm-hmm. Yeah. So if you reduce somebody's compensation below 25%, $3,000 for an employee, $3,000 won't be forgiven. And again, that's going to be an interesting calculation because it's going to be employee by employee. But I believe that's how it's going to work. I think it's both of those calculations could potentially impact how much of your loan is forgiven.
Now, what documents from 2019 will we be required for the PPP loan for a sole proprietor? Just payroll records from 19 or a P&L statement for 19?
Yes, if for a sole proprietor, what we've been told is the amount that you can use for compensation is your net business income,
which would be self-employment.
Your net self-employment income. So whatever your bottom line number is on your Schedule C, that would be considered your annual compensation, if you will. Obviously, you have to cap it at 100.
Plus, if you have employees, then those employees come into effect as well.
Correct. Yeah, if you had employees, just like any business had employees, those would be handled exactly the same.
Let's see. Do you know if Chase Bank is being sensible about what they're requesting?
I do know that Chase Bank was probably the very first bank to actually have an online application for these loans. They were sort of ahead of most everybody. That said, I'm not exactly sure what they've been requesting. I just know Chase has been at the forefront of number one, letting people know they were going to do the loans and actually even having an online application process before anybody else did. Several of the other banks we've talked to do not have an online application process. It's go to the, here's the PDF that you fill and send it to us, print it and send it to us, or
go to the SBA,
or print it and email it to us. Yeah.
Well, because that's the next question is, where can we get a copy of the full application forms?
Well, we can send them one. They can go to the SBA website. I believe on our website, as I mentioned at the very beginning, on our COVID-19 button, there's a tab in there that says helpful resources, and I'm pretty sure there's the PPP application right there on that button. If not, you could probably just Google PPP application, and I bet you could find it. But if you can't find it, just give us a call or shoot us an email would be better. Shoot us an email and we'll email you a copy of the application.
We'll check our site afterwards, and if we don't have one up there, we'll put one up there.
Yeah, there's one there. I'm pretty positive there's one there.
Now, if you pay a staffing agency for some of your employees, can that expense be included in your PPP calculation?
No, it's not.
No, it cannot.
And what about holiday pay? Would that be a qualifying payroll expense?
Yes, it would.
Now, how do you handle non-consistent payroll, such as commissions from real estate sales that happen, irregularly throughout the year?
Well, that's one of the tough ones, but obviously to calculate your loan amount, it's going to be the previous 12 months. So it doesn't matter how inconsistent it was the previous 12 months, the 12 months, or the 12 months. That could be a planning opportunity for someone if 2019 had higher numbers than the last 12 months. You may want to look at both of those. But the other side of that is the other piece is the 8 months after you get it. After you get the money, and it's 8 weeks. I'm sorry, it's the 8 weeks. And so whatever happens in the 8 weeks happens in the 8 weeks. And it's going to be what's been paid, not what's to be paid. So, a real estate person whose closing doesn't happen until week 9, sorry, it won't get included. So that's a great question, but the law currently doesn't provide for any smoothing of something like that.
That's another place where I might say the PPP, when you're making this calculation, you're coming up with the maximum amount that is available to borrow. You don't have to borrow that maximum amount if you think that you're going to be in that next 8-week period so inconsistent that it's going to create problems. Obviously, everybody wants to get as much as they can get. But you might have to look at that and the reality of it and think of it a couple of ways. Number one, if you have to pay it back, it's really cheap money. So when things do turn around and the closing does happen, you can pay back the portion of that loan that is not forgivable and be done with it. But it's still, 0.5% money is
pretty good deal.
We don't see that very often. So,
yeah.
We don't have all of those answers. That's kind of an individual by individual scenario.
Now, can you confirm that unemployment taxes paid to TWC can be included in the payroll, but the employer's portion of FICA is excluded from the payroll calculation?
That's correct.
That is exactly correct. You can include the state unemployment, and that's all. No FICA Medicare match does not get included.
Or if there's a local tax that's based on compensation,
yeah,
that can go into that. That doesn't happen in Texas, but some other states it does.
Now, if your FTE has decreased from 2019 because of retirement, is that still considered a reduction?
Yeah, it is. There's no provision currently in the bill that provides for that. It doesn't quite seem fair, and that could be something that changes, once guidelines are put together. But currently, there's no provision for someone that's retired, or what if they died, or there's. I guess the argument would potentially be, hey, if they were important to your business and they retired, you should have had to replace them. Therefore, you lost an FTE, but you added an FTE, so the net gain is 0. But there's nothing in the bill that gives you any break for someone who's retired.
You're just down 1.
Yeah, you're just down 1. That's just the numbers are what the numbers are.
And does that number of employees also include the employer who's drawing a salary?
Absolutely.
Yes.
Now, what if you have a remote team, so you don't have rent or utility costs are going to include your phone, data, Office 365 software, things like that to make that virtual office?
Well, the bill's pretty clear about the expenses you can use, being rent, being internet, telephone, interest. I mean, it's pretty specific as to what you can use. So, there's nothing in there that says you can use your software subscription fees. Again, there could be some more guidance on that. I mean, as an option, you could potentially pay your remote people rent for the 8 weeks, because they're in a sense in their home office. You could pay them rent for them being in their home. But there's no provision, again, for having a remote or virtual team.
What about a case where you have a parent subsidiary situation and the sub pays the payroll and the rent, but the parent is paying the mortgage?
That's a good question.
You know, I mean, I guess part of that would depend on how you're applying for the loan. If you're applying for that loan under the parent's federal ID number, assuming there's just one loan being asked for, then I would think all those could be included.
And if you include healthcare benefits in your payroll calculation for the loan amount, are you also able to include those healthcare premiums paid by the company and profit sharing in the second calculation?
Yes. Yes, the payroll costs that you use to determine the loan are the same payroll cost you use to determine forgiveness.
Okay. And let's see, and I think we touched on it. Should we include part-time employees in the number of jobs and payroll dollars?
Yes.
Correct.
Yes. Yeah, there's no delineation between part-time, full-time, you know, only worked one day, you know, whatever. Anybody you paid as an employee or a contractor is to be included.
Now, what about a case where you have the same number of employees as last year, but they were working a lot of overtime, so the payroll was going to be considerably higher in 2019? Would that have, when in 2020, when they're having less work and smaller checks? I mean, I think that kind of goes back to the other question.
It does. Yeah. Yeah, it does. I mean, that's, again, it's, if it's less, if it's 20%, 25% less in the period, again, it could impact your forgiveness, but you'd pass the FTE test, but you would not, you know, depending on how much less their pay was, you may not pass, you know, fully forgiven on the payroll side if the salaries decrease more than 25%.
And that's easy to see. If somebody had a banner year in 19 and everybody got bonuses and this year is a lousy year and nobody gets bonuses and their salaries stay the same, it can happen. That's, unfortunately, that's just the luck of the draw.
Right.
Now, if you're a one employee C Corp applying for this, do you qualify as a small business under the SBA standards?
Yes.
Is there any relief for loss of income from rental property?
Not through the PPP. I mean,
Yeah, that's more in the
that would be an EIDL. That would be a emergency loan, SBA loan, not the PPP. PPP, you got to have some sort of form of payroll, and then the key to that payroll is that payroll needs to be self-employment payroll. So if you had an S corp that had profit but there was no compensation paid, no wages or no 1099s paid out of the S corp, you would not have any payroll.
If your small business only has 1099 employees, should they still apply for the PPP using the 1099 information?
Absolutely. Yes, absolutely.
Let's see. We have another one about remote team should you include utilities to include phone, data, etc. That's very similar to other ones.
If the company's paying for it, yes.
Can you explain the application of the affiliates question on question number 3 on the application? For some context.
It's a good question. There's no guidance on that anywhere. We think what they're looking for there is somebody who tries to get a loan on a lot of different businesses, and perhaps they're paid by several different businesses. We've got some clients that have multiple entities and draw a paycheck or draw a 1099 from multiple entities. They obviously don't want you to use $100,000, you know, for the same person in 5 different companies. And so I don't have an exact answer there for you, but you know, what they're asking for is if anybody in this company has a 20%, I believe, ownership or greater in another company. To me, if it's a company that perhaps just owns real estate, there's no employees, I don't think there's necessarily a need to list it. But if it's other operating companies that would possibly be applying for the loan, you probably should. But again, there's no real clear guidance on that, and I don't know why you'd want to muck up the application process by listing the 27 real estate partnerships you're a partner in. that has no impact on this program. Tom, I know on our application we did list one of the other entities that will not be applying for the PPP loan, but we just listed one.
Yeah, it's a partnership that owns the building that we office in.
Right.
Where people are going to see it a lot, I guess, would be if you're in a management service organization where you have some centralized services being performed for you by another entity, and that centralized organization has all of the employees, and maybe you're down in a separate entity. I would assume that the management service entity at the top would be, if they have all of the employees centralized, they would be applying for a loan for those employees there, and the entity down below with its payroll would apply there with just that payroll, but there would be no crossover. Again, I think they're looking for somebody trying to double dip.
Yep.
And I can guarantee you with this thing, there will be people that try to get as much as possible.
You bet. Absolutely.
Now, talking about double dip, though, and you kind of touched on it a little bit, because does rent paid to another company that's owned by common ownership, does that still count as rent expense for your operating company? You got a lease in place?
Yep. As long as there's a lease in place, it's a arm's length transaction, if you will, and reasonable. You bet.
The lease has to be in place by February 15th of 2020.
Right.
What if you're a sole proprietor for half of 2019 and then starting in June became an S Corp? How does that work for calculating employer payroll?
That's a good question. I think because you got one person, that's one FTE really, because you can't be more than one. So I think that you have to add those items together and cap it at the 100. And then you get whatever benefits you have.
Mm-hmm. Yeah, that I would agree. We've not had that situation, but if that were me, I think I would use my. I'm currently an S Corp. I think I would use my S Corp to apply for the loan, but I would look back at the last year and see what total compensation was for the last year. I mean, remembering that if it's just you, you're capped at 100 for compensation. But I think that would make the most sense.
Can you include bonuses from last year as part of the payroll amount, or just base salary?
Total compensation, base, bonus, whatever it is, with total comp.
Commissions, whatever.
Doesn't matter what it's called.
Let's see. Healthcare payments are made only for the employer. Does that matter? Can you still include that in your
group plan?
I mean, that's technically not group health insurance if only the owners having their benefits paid. I mean, that wouldn't meet the qualifications of a group health plan, which is what you can deduct. So if the business is only paying for the owner's health insurance and not the other employees, I would say that would not be allowable.
Okay, a couple more. There's a 1099 contractor who started working at the beginning of February. Would you include that in your calculations for the loan?
The beginning of February 2020, I presume. I mean, if you would have to, of course, use the period, the 12 months that begins in February of 20 going back to January of 19. If you did that, then yeah, you would include it. But I mean, again, you got to pick that 12-month period, be it 2019 or be it the most recent 12 months, whichever period you're going to choose.
Can you apply for both EIDL and the PPP?
Yes, you can.
Okay, a couple more. Will you be sending out these slides to the attendees, or will they?
We are going to put both the slides and a recording of the webinar on our website. They will probably be up, probably not today, probably sometime in the morning. We'll have them on the website. And again, they're going to be on our Corona tab, so our COVID-19 tab. So go to our website, click on that tab, and the slides. But we put the slides from our previous webinar there as well. So we'll have this one there too.
Okay, and a couple of people having a hard time getting good information from their banks. And do you have a recommendation for a bank that you've spoken with who's on top of this, who's on the ball?
Well, I mean, I got to give a plug to our bank, Frost Bank. Frost Bank is all over it. They absolutely want these loans, and they're really taking a posture of we're here to help in this hard time. So I would highly recommend Frost Bank. If you need a referral to a banker over there, shoot me an email or Tom an email, any of us, and we'll give you the contact information of our banker. I'm sure they would be happy to visit with you.
I think we covered them all.
Awesome.
It's,
Awesome.
But again, if I missed something, please feel free to email any of us or call any of us.
Absolutely. Hey, thank you guys so much for participating. I mean, we had almost 100 people on the call today. A lot of great questions. Again, we're here to help. If there's anything we can do, we've already prepared quite a few applications, not our own being one, and several of our clients' applications we've done already, and many more we're going to do. So if we can help you in any way, please feel free to reach out to us. Thank you so much. And Tom, you want to say anything?
You know, as much as everybody wants to get in there and be first in line, I think that there's going to be a little bit of time there because a lot of people are putting brakes on. Like Randy mentioned earlier, I had actually seen an email from one of my contacts that said his banker told him that they were meeting with the SBA and they said that they were going to put a hold on this. I don't know why they would. I mean, it's so antithetical to what they're trying to do, which is get the money out to people now
that need it
now. And a lot of the banks are putting all these crazy things on it, and I'm not sure why that is, but I don't think that the money will be gone tomorrow. So if you're looking at me and saying, why don't you have our loan prepared yet, we're doing them as fast as we can. And your CPA, if we're not your CPA, they're probably working as hard as they can as well to get them done. And good luck to everybody with it. And I can't believe that Congress, I mean, they've already been talking about another $2 trillion to put in the system, which I think that's crazy too. But unusual times call for unusual measures. So, get it together. If you have questions, like Randy said, call us or email us. We've been answering questions all day long.
All week long
while trying to get this presentation together as well. Randy did a great job with virtually no time. And so
thanks again, everybody. We appreciate it. Holler at us if you need any help. We're here to help. Thank you. Take care.
Bye-bye.
Bye-bye.